Hey guys, good afternoon, everybody. Today is Tuesday, July 5th. I'm gonna set up this room real quick and we'll get started with our mentoring session for this week. So let's gotta do a couple of things here to update everything. More things here. That's good. All right. All right, solid. Got that set up. Let me get this link sent out to you guys. You're in the premium, and we should be good to go. All right, cool. All right, guys. Give it a few minutes for people to make their way in, and then we will get started with this. All right. So I'll give it a few minutes for people to make their way in. All right, cool. Looks like a few of you guys are here already. This session is scheduled for 2 p.m. So it's 2:02 right now. It's only 2 minutes after. So I'll give it a few more minutes for people to join. If you guys have any specific questions right now, just go ahead and put your questions in the chat, and then we can start off with whatever you guys need help with. Otherwise, if you don't have any questions today, I'm going to be going over the K2 high-low strategy applied on the 15-minute. This is one that I've been testing lately. I've been trying to look for losses, like purposely. I haven't found too many. So this is like it's a tweak version of the high-low scalp. So this is basically the high-low on the 15-minute, and this is the high-low on the 1 minute. So I mean, it's pretty much same requirements. The only difference is you don't have to confirm the overall bias. We're just using the trend meter. And then also, it's just simplified. It's pretty much the same thing. It's just very simplified. So other than that, we'll probably go over this after. I'm going to answer the actual questions that we have from people here. And then after that, we can go over this strategy and I'll show you guys some examples. It's working pretty good. So I think it's something that we can play around with and something that I might be using. I mean, I could probably even call signals for this because it's such an easy strategy. Probably be easier if you guys did it yourself, but I mean, I could probably call them out when they come up. I was looking for this one right here. So I'm waiting for it to break above. Trend meter is green right now. So if it breaks above, maybe take that, but market's closed right now. It can reopen in about an hour. All right, Maria said she has 3 questions. So let's see, let's start off with Maria's questions here. So Maria's first question is how to draw the red zones for the snipe strategy. So to draw those red zones, I'll go over here to the 10-minute. If you're applying the snipe strategy, and I will put the requirements over here so that you guys know what we're talking about. So basically, Maria's asking how to identify the zones, right? To identify the zones, you turn on the K2SR version 2 indicator, which should be right there, K2SR version 2. Typically it'll look like this, but if you want it to extend across your chart, you just go over here, go to inputs, line length, just put 1,000. And you can see the zones extend all the way to the end of your screen. So your question here, Maria, is how do you draw the zones, right? To draw those zones, you're going to pull up this rectangle tool, and you're just going to draw over the zones there. So basically all you're doing is you're drawing over the K2SR zones, and that's about it. If you wanted to extend across like I typically do, you just go to your settings here for rectangle tool, extend right, extend left, and this is how you draw the zones. So I'll just draw them out right here so that you can see, and then if there's any further questions regarding this, feel free to let me know, and then I can show you how it looks after. So I've drawn these zones right here. If they overlap, you can just connect them. Another one there. And lastly, another one right here. So once you have that drawn on, you just turn off your K2SR indicator, and then you have your zones right here. So if you're applying the strategy, say for a snipe right here, this is where your rejection off the zone would be, rejection off the pivot, and that would be your entry. Or that right there. Maria's question is, how do I know where to draw them? So you're going to pull up the K2SR indicator. So let me just take everything off the chart. I don't know if you missed it earlier, but so let me just take everything off the chart again, and I'll do it again from start. Maybe I was just going too fast for you, but let me just show you. You're drawing over the K2SR. You can leave the K2SR if you want, but it's messy. So this is what it would look like, right? With nothing on there. When you turn on the K2SR, it has the zones right there. So that's where you know where to draw them, because they're on the screen. You're just drawing over them. So you get your rectangle tool and you're just drawing over them. Do you get that, Maria? Just want to make sure you're understanding so I know where your confusion is. Yeah, so you're just drawing over the K2SRs. That's how you know where to draw them. If they overlap, you'll just make one big zone. So say for example, right here, we have this one, right? But you can see right here that it overlaps with the green one. So you're just gonna draw over it. And then you just pretty much you go from top to bottom if you want. It's really up to preference. You don't have to draw all of them because you're looking for a specific entry, right? So, I mean, you don't have to draw all of these like that. Like for example, over here. Here, I'm just gonna show you how I would personally do it, because I don't draw all of them like this. This just makes a mess on the chart. So it's super unnecessary. You only want to draw that if if you're applying the SR strategy where you need all the zones. So no, it doesn't matter. Maria's asking, no matter the color of the lines. No, it doesn't matter. They're zones, right? So it doesn't matter if it's red or green. You're not looking for a support or resistance. The K2SR stands for support and resistance. So if you have a red line or if you have a red zone, this was initially a resistance, but if price crosses above it, it becomes a support, right? Same with this right here. This was green because it was a support, but just because it's green doesn't mean that it doesn't continue to be a support. When price breaks below right here, see how price breaks below the green lines, it becomes a resistance. So the colors don't matter. It just indicates what it was initially. So when it was created, this was a support, and then same with the red, it was a resistance. So I'll show you how I would do it. So say for example, you're looking for an entry, right, for a K2SR. The zones are typically the last thing I would look for. I don't really care about the zones until after, because they're just the last confirmation. So for me personally, if I'm looking for an entry here, say that I have, let's see, I'm looking at this one right here. right? So I have the K2SR off. I have the requirements here for the snipe strategy. The way that I typically look for, I just look for a wick rejection off like the pivots first, because that's what really matters. I mean, you're not going to have an entry unless you have a wick rejection off the pivots, right? So this candle right here closes, and you can see there's a wick rejection off the green pivot, right? So that's like the first thing I look for. The next thing I look for is if I'm trading the direction of momentum. We have a sell momentum right here, so those align. I'm going not in order, but it depends on like how you guys want to look at it, right? The requirements are there, but they don't have to like line up in order. As long as they're all met, then that's all that really matters. So for example, here I have the wick rejection off the pivot. We have a sell momentum right here. That's going to be requirement 2. Overall bias was a sell today, so requirement 1's met. Requirement 3, this is like the last thing I look for, because you look at everything else, that's going to be like the last check off the list. Confirm wick rejection off pivot does not touch the candle body. Body's right here, pivot's right there, completely fine. And then confirm trading the direction momentum, which we're looking for a sell here. It's all met, right? The last thing that you're looking for, or that I would be looking for, would be the wick rejection off the K2SR zone. So if I turn on the K2SR, actually this wouldn't be an entry right here. So this is where I would identify this as a non-valid entry because there's no wick rejection. So that's how I would look at it. And if that's not met, then there's just no entry. Let me see if there's another one here. So there's actually no entry right here. There's a better example up here, actually. Let me go up here. And I'll just move this up. It's pretty much the same thing. But this one, there's actually, an entry over here. So let me go over here to say, okay, this candle right here. All right, so we'll do the same thing I just went over. Again, just different entry. So basically, the first thing I'm looking for is I'm going to look for a wick rejection off the pivot, right? So we have the same wick rejection off the green pivot right there, off that red candle. So we've confirmed the bias. We've confirmed the wick rejection off the pivot. We've confirmed that the wick rejecting off the pivot does not touch the candle body. Body's right here, pivot's right there, completely fine. Fits the requirements. Confirm you're trading the direction of momentum. We have a sell signal right there. That's met. Last thing that you want to look for is going to be the SR zone. So again, as I mentioned, you don't have to keep the SR on because there's so many lines, it's going to trip you out if there's like too much on there. So like what I do right here is I'll just identify that there is it doesn't even matter which one you choose, because you can choose the red one, you can choose this green one. They all line up, right? So if you drew a zone right here for the green one, it fits your requirement because you do have the rejection off that zone right there. If you wanted to use the red one, I mean, you can use that too. It's the same thing. It's just wider. So if you wanted to use this one over here, this is why I don't really care about the zones, because you're just looking for that rejection anyways. It doesn't matter if you have the green one, red one, far, close, doesn't really matter. You just need to make sure that it's met. So whether you drew the green one or the red one, either or, this one here would fit the requirement. So with that said, you would take this for a short. You'd have your fixed TP stop loss for 500 pips. You let it run, and there you go, full TP. So that's how you do it, Maria. Not too difficult. I know it's kind of confusing if you're like drawing all of the zones, because you might feel that you need to, but realistically, you don't really need to. You don't need to necessarily draw all of them because they're not important, right? The only one that's important is the one that fits your strategy or your entry. So, all right, no problem with that, Maria. Let's see what your next question is. How to confirm a valid momentum signal. So for that right there, in order to confirm a valid signal, it would have to be the same color. So if you're getting a red momentum sell signal, you just need the candle within it to be red. That's going to make it valid. Vice versa, if you have a green buy signal or a green bullish momentum signal, whatever you guys want to call it, you just need a green candle within it in order to satisfy that requirement. So green and green, valid. Red and red, valid. Green and red, invalid, right? Because in order for this to be valid, this would need to be a green candle within this green momentum signal. So valid, valid, invalid, valid, valid, invalid, valid, right? Valid, invalid, it's a red sell signal, but it has a green candle within it. So this is invalid. This is valid. 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 This is invalid, right? So that, and a follow-up question from Maria. Maria's asking, the trend meter is important or not? It's not, because that's not, they're two totally different indicators. So if you're looking for a valid signal, then you're only looking for the momentum. The trend meter doesn't mean anything because the trend indicates trend, momentum indicates momentum, right? So you don't really need the trend meter unless you're applying a strategy that that requires it. Just the indicator, it's not important because it's not part of the indicator. It's just part of whatever strategy you're applying. So no trend meter for the indicator, but if you're applying like the intraday strategy, then yes, it is important because it falls under one of the requirements. All right, so other than that, let me see your last question, Maria. Last question from Maria. She's asking, do the 10-minute snipe and 3-minute pivot strategies need a signal to go with the bias of the day? For the so sorry, Maria, I'm kind of confused with this question. So you said, do the 10-minute snipe and 3-minute pivot strategies need the signal to go? Well, the requirements for these strategies will determine, what is necessary. So if you're applying the snipe strategy, you're not looking for a signal. So you don't need a signal for that. There's no requirements you're indicating that you need a signal. You're basically just looking for the overall bias. The direction of momentum is going to be, the direction you'll be trading. So there's no specific signal that you'll need, but you'll need a signal there in the direction of momentum for you to take the trade because it will be one of the requirements here. So it's not necessary that you get the entry with the signal, but you're going to have to confirm the direction of momentum. Oh, gotcha. Okay, Maria. Yeah, no problem. So, and for the 3-minute pivot strategy, it's the same thing. So, yeah, you're just gonna, actually, I don't know if this is correct. It's supposed to be this one. So you'd confirm the overall bias, but for this one, you do need a momentum signal. That's where the entry's made. So like, say, for example, you're on the 3-minute. All right, so say you're on the 3-minute right here. And we'll go to like a random entry, like, I don't know, this one right here. All right, so looking at the 3-minute right here, if you're applying the strategy, I know it says 1 minute, but it's just the 3-minute isn't updated with the bias requirement. So for this strategy here, you're going to confirm the overall bias, which was a sell. And then you're going to need a valid K2 momentum signal. So yeah, for this one, you do need a signal, but for the 10-minute, it's not necessary. Gotcha. Yeah, no problem, Maria. Yeah, I know it's kind of confusing. That's why I always tell people to just focus on like one strategy or like 2 strategies at first so that you don't get confused. Because if you start to like mix up strategies, you're going to start looking for different requirements that don't apply. Like I've seen it happen with a lot of people. Like for the snipe, they're like very distinct requirements for that strategy. And then for the pivot scalp, they're very distinct as well. Like you need a momentum signal and whatnot to take these entries. So I think I've answered all of your questions there. Maria, if there's anything else, just let me know. But I think that's pretty much covered for the most part, the questions that you have specifically. Okay, perfect. No problem, Maria. Let me scroll up. Let's see. We have another question here from Fraser. So Fraser said, hey, Sean, looking for some clarification on market opening and closing times. I understand for US 30, there is New York, London, Asia sessions, and outside of these, we refer to the market as closed, but I can see the market moves before open on New York session, does this mean the market isn't actually closed? So yeah, good question, Fraser. The futures market is open basically 24 hours. It's like the Forex market. So the thing with US 30 is that the futures market is open. So it's always moving all throughout the day. But um, the actual stock exchange is not open, right? So that's the difference here. The US stock exchange, which actively trades US 30, because this is a US asset. So like when you want to trade US 30 when volatility is high, you typically want to trade when the market's actually open. So when we say market, we're talking about the US stock exchange, right? The New York Stock Exchange, NYSE. That's why we trade at 6:30, because that's when the market opens. That's where you'll get like the highest, you'll get the smoother moves and the higher volatility. So like, for example, right here, let me just draw a line. The 1 minute is probably gonna be too small, so we'll probably have to go on like the 10 minutes so I can actually show you. Let's turn these off over here. Okay, so the market opens right here at 6:30. And then the swap happens, depends on the broker, but typically the swap happens around like 1:30. So this is the actual US market for the stock exchange. So like this is when the stock exchange is actually open. That's what we refer to when we say that, this is market open, because this is when the market actually does open. This is all pre-market, but it moves, it still moves, right? Like a lot of these assets that are within US 30, they're global assets. So they're still running, all throughout the world. So like, for example, this right here is London session where they open at midnight. And London overlaps with US. So this right here is London session. This right here is US session. And you can see right here that the market's closed. This is a swap. The market is closed for the next day, and it reopens right here at 1500 hours, which is in about it's in about 30 minutes or so. So back to your questions. So this is like where it differs from. The market isn't closed because the futures market is like open basically 24 hours except for the swap time. And the market still technically moves, but it doesn't move as smoothly as it does during New York session. Like for example, right here, it's pushing up because this is the New York session, right? This right here is pre-market. You'll get pre-market orders in there. And then this is Asia session where market's kind of dead. Where's that? Well, the market was actually closed yesterday. So you can see that the whole market yesterday was kind of slow overall. It was a holiday yesterday here in the US. So the market was technically closed, and that's why the entire movement here was pretty slow. But typically, New York Asia session is going to be from this point, 1500 hours up until about midnight. So this is Asia session. You can see that it moves very slow. Reason for that's because it's not US market, right? It's moving slow. London session here has it crosses over with US session, so it's a bit faster, but it's not as like fast as like New York session right here. So if you wanted to count the range or just identify where price was moving, so price range right here from Asia session, it has about a 2000 pip range, which is it's kind of decent. It's not like horrible, but it's not fast enough to like catch bigger moves. And then here's London session. It's about like 5,280 pips. And then here is New York session. It's a bit higher, 6,220 pips. So that's the difference between the markets. The futures market is technically open. If you wanted to trade the stock exchange, like if you wanted to open or buy a stock or whatever, like one of the US 30 stocks, and you tried to buy it right now in the US market, you couldn't execute your trade unless your broker provides, aftermarket trading. So it just depends on what you're trading. If you want to trade a stock or something within this US 30, you're not going to be able to, because the market is technically closed. They can't fill any orders, but the futures market is open. So other than that, I think that's it. Swap times when it switches over to the new day, Fraser. So it switches over from, today is Tuesday, because so the futures market runs on a different clock. Their day turns over during the swap time, which would be right here. It depends on the asset that you're trading. The futures market, the swap time is between, I believe, 2 o'clock and 3 o'clock. So the market's closed for an hour. Basically, if you're holding a trade between that time, you pay interest because you're holding it for another day. So this is where the new day starts within the futures market. It's a 24-hour market, but it has like about, depending on what you're trading, US 30 is closed for about an hour. FOREX is closed for about 2 hours. So if you try to trade FOREX, I can't remember what the swap time is for this FOREX. I used to send out an update in the group, but we don't really trade FOREX as much. But let me see. I think it's here somewhere. You probably just look it up, swap. Yeah. So the swap is typically 2 to 3. That's the period for most assets. It's basically 2 to 4. That's like the time where the swap happens. You don't necessarily have to close your trades, but it's better to close it because price can gap during that period. And also you have to pay commissions on your trades if you end up holding it during the swap. So it's just like different markets work on different clocks. So, you know, if you're trading US market, you want to trade during US, and then the swap time is really the thing that makes that where you can identify where the new day happens. So like we'll swap, and the reason it happens like that is because the trading day typically starts on Australian time, I guess, or their morning, because when the market reopens, it's open for Australia, and then at 4 o'clock it opens for Asia, and then at midnight it opens for London, and then next day we're typically the last market that opens, and then we close it out. So I know it's a bit confusing, but it shouldn't really matter to you unless like you're trading something specific like Forex pairs, because that's where it really matters with those swap times and sessions. But for US 30, you'll just understand that it moves slower during off times, which would be like right now. Like right here, you can see market super dead. Well, it's not even moving, but when it does start moving in the next 30 minutes, it's going to be pretty dead. Yeah, no problem, Fraser. Let me go up higher and see your second question here. You mentioned the market is opening again in 1 hour. If US 30 is made up of companies listed on American stock exchanges, why is the market opening again? Okay, so same, it's just a second part to your question. It's just US market is closed. You can't buy those stocks like you mentioned. You can't buy those stocks right now if you wanted to, unless you're trading on something like with a liquidity provider. Like usually a lot of these Forex brokers will let you trade, but you can't buy them on a regulated broker. So like if you're on, say, Robinhood right now, or Webull, or TD Ameritrade, they won't let you execute the trade unless they allow for aftermarket trading. Yeah, no problem, Fraser. All right, glad I could help you with that. So let's see. Yeah, I know, Maria. Sorry about that. Yeah, Maria said the videos on the website aren't updated with bias. So yeah, I'm trying to put together, well, I need to organize it. I want to redo the entire videos section for our website, because the thing is we have so many new things that come out, and it's like stuff that I can't really teach in order because everything's different. So over the next couple months, I'm going to be planning out a layout where you guys can learn stuff in order. I mean, typically you guys won't need it because you guys already know what to do at this point, but for new members, I'm going to try to organize it where it's easier to understand things in order. But I will be updating them soon. Maria, when I make those updated videos, I'll update the links on the course. But long-term goal is going to be creating a format that'll be easier for you guys to basically build the foundation. Because I feel like that's a problem with a lot of people is they don't build the foundation. So like there's a lot of confusion. But I'm gonna have to, it's just gonna take some time for me to figure out what works best for the majority of people. Scrolling up, let me see if there's anything else here. So next question is from John. All right, John. John said, hi, first time here. Happy to be here. Definitely, John. Glad to have you here with us. Your question here is, I was wondering, I'm using US 30 in my trading view chart from my broker Global Prime, and it looks like sometimes I miss the K to momentum indicator. Looks like there is a 0.02 to 0.01% difference with US 30 of currency.com. Should I care? Sorry, it's not a dumb question because I know a lot of people have that. For me personally, I haven't tested Global Prime. They were a new broker that came on TradingView like years after I started trading US 30. So for me personally, I've done all my testing on currency.com. I found currency.com to have the most accurate data. So unless you're trading like directly on Global Prime, I would go with currency.com. But if you're trading directly on Global Prime, like if that's your actual broker, then I would just keep using them. I mean, I don't think it makes a huge difference. I know you're going to see some differences in momentum signals and maybe your high low sometimes, because each broker is going to be a bit different. But like you said, it's only off by like a 0.02 or 0.01%. So it's not going to be a deal breaker. Let's see, I have an example right here. Okay, cool. So this example from this morning. So yeah, you can see that it's a little off. It looks like these look okay. Yeah, it looks like this one over here misses one of them. But then they kind of just invalidate each other. Like for example, here it misses these two, but this just comes down a little bit and then comes back up right here. So I wouldn't say it necessarily makes a huge difference. I mean, if you're trading directly on TradingView with Global Prime, then I would just use them. But if not, I would prefer that you use currency.com so that there's no confusion and there's no differences with our chart analysis. And yeah, no problem, John. If there's anything else that you want me to cover on that, just let me know. But that's a common question that we get because I know some people trade directly on TradingView. Like if your broker is on here, then I would just use your broker data because that's what you're trading off. But if you're not, if you're doing like what most of us are doing, where you're just charting on TradingView and then executing on a different platform, then I would just use currency.com. So your next question here is from HP. HP is asking, can you go over how people make back-to-back trades with no losses? It's really hard for me to comprehend, but I see people doing it every day with back-to-back trades within minutes of each other. I know you're conservative, but I'd like to know what others are doing. So that's a question that you would have to ask that person, right? Because I don't know what they're applying. If I knew what they were applying, I mean, there's ways that I can do it. Like I can show you how I do things, but I don't know what they're doing specifically. So a lot of the times, what I've seen from like other people is they're applying multiple strategies. So like sometimes they'll see, and this is just one example, right? There's like a couple of things that you can do here. One thing is that you can be trading on multiple time frames. Like sometimes people will see an entry on the 1 minute, they'll see another entry on the 3 minute, and they'll see another entry on the 5 minute or the 10 minute or 15 minute, right? It's just really up to how many charts you're looking at. Like for example, here, if you're to find, all right, so we'll just say this right here. And sometimes there's multiple strategies that align with one entry. So just say, for example, right here, or I mean, I guess we'd use this right here. All right, so there's an entry. Let's see if I can find. I just want to find one that kind of lines up with like others. So right here on the 1 minute, we have an entry right here, right? This is going to be two different strategies. You're going to have an intraday scalp right here. And this is one, I've seen other people do this. Like there's just multiple entries off like the same candle. So there's an intraday momentum right there. They'll take one trade there. And if they want to double up on that and they also identify the pivot scalp, they take another trade right there, right? That's like stacking a trade there. or taking two different entries. You can go on a different time frame, like 3 minute, and this right here would be another entry, right? So we have two entries right there already. Right here would be a momentum pullback, right? So you could have entered again at a different period. So I don't have the requirements here for that strategy, but I've seen other people apply it. If you're not familiar with the momentum pullback, basically you're identifying the trend. Trend here is up because we have pivots to the upside, prices above the pivots, trend meter is green. So what you would do here is you would enter a buy entry right there, right? So that's another entry where they are holding it. Usually a lot of these people who are entering like a lot of trades and they've been part of K2 for a while, it's because they don't really have to think about these entries. They see these entries on different time frames and they can just enter right away. So there's a third entry right there. I'll just put another one, K2 momentum pullback entry. So that's 3 strategies right there again. Let me see if I can find anything else here. Nothing there. All right, so there's nothing right there. Let me go to the 5 minute now. We're still on the same exact candle. This is a candle that we were looking at just a few minutes ago. 3 strategies applied there already. You go to the 5 minute. There was a pivot scalp entry that was already running over here. So like someone could have had another trade running right here as well. So 5 minute pivot scalp. Right here, K2 scalp. And this is something that like, I mean, if you're not good at like at one time frame, this is not something that, you know, someone should be doing on other time frames. But some people are good at applying like different strategies on different time frames all at once. And this is all off that same exact candle. So that same candle that we just looked at on the 1 minute, there are all of those other entries that came up as well. So the 1 minute right there, there was 2 entries. The 3 minute, there was 1 entry. 5 minute, there was 1 entry. If you go over to the 10 minute, there's probably another snipe entry right there too, or not. So there's no zones down there. But yeah, you know, just going over that, what I just showed you right now, there's 4 different entries. So if you entered all of these, or whoever you were looking at entered all of these, there's 4 entries you're getting right there. So you would have had 4 back-to-back entries basically around the same time period. You'd have 2 1 minute entries, 1 3 minute entry, and 1 5 minute entry that could have happened, you know, a few minutes before. So does that make sense, HP? That's one way of doing it. Another way of doing it is catching the retracement. So like, say for example, so here's the 5 minute. This is like one that I typically would do sometimes. And this is a more advanced way of trading. So like, if this doesn't make sense to you, you should be trying it out. You just got to make sure that you know what you're doing. So like, for example, here, we would have had this entry, right? Like right there, we have an entry, price comes back. And this is stuff that like you'll pick up. This is all like nuances that you kind of start to see in the market. Like you see these little patterns right here. You can see price reject off the pivot. That would provide for another entry, right? Because you already know that you're trading this direction. You're basically trading within the trade. And I'm sure that you heard us talk about that a lot. Like me, Maddie, and a couple other people, we always refer to trading within the trade. We already have a trade running here on the 5 minute, and you're basically entering trades within it. So like there's an entry right here, and you can catch it as it bounces off. This is not a specific strategy, but you can typically see if price starts to move around, there can be room for another entry right here. And when people are taking entries around these points, they're not going for the full move. They're going for little moves within it. So typically, I know you've seen like Kevin's profits, right? That's probably one person that you're referring to. Kevin only shoots for 100 to 200 pips. So he doesn't take the full move. He typically only shoots for partial movements within it. So if you're only going for 100 pips, like what he's doing, he has a full move here, but every time price bounces off these pivots, he's taking like 1 trade there. Price comes down again right here. He doesn't necessarily take the full move, but he goes for another, you know, 10 pips there. Another rejection right there is another third one. another 10 pips right there. So that's where you see people stack on multiple positions within a full move. But if you're going to be doing something like this, you have to identify the entry on the higher time frame, right? Because you can't do this on the shorter time frame. If you're on the 1 minute, it's going to hit your TP right away because your target's going to be a lot closer. But if you're trading on like the 5 minute, 10 minute, 15 minute, something higher, where you'll have a lot of back and forth movement, that's where you can stack positions on top of it. But you know, like you said, like you can't comprehend how they're doing it, then you're just not at that level of being able to do it yet. Like you can do it eventually, but I would recommend that you don't do it on a live account. Do it on a demo account or something so that you can kind of understand. A lot of this stuff is just trades that are taken off the fly. Like it's hard for me to explain this to someone that doesn't get it already because you know, some people get it, some people don't, because this is like something that you just build over time. You start to see these same patterns. That's why these pivots are used in many ways. Like these pivots can be used to identify the trend. These pivots can be used to identify entries. So you can see, for example, right here, this is something that I see a lot of people apply to, like you've seen Sisuk in the group. He'll take trades when price is trending heavily. So like, for example, here you can see price is trending down heavily. And this isn't something that I recommend you guys do because obviously if you haven't kind of identified this, then it's not going to make any sense to you. Like, for example, when price, because I already know what the next question is going to be. Someone's going to ask me, okay, how do you identify when trend is heavy, right? There's a lot of ways to identify it. You can see when price starts to spread out down here, trend meter's red, pivots here are starting to spread out. So you can see how they're crossing over. And then as soon as they start to spread out like that, where it's in order, red, orange, yellow, and green, this is where you can identify that the trend is very strong. So when something like that happens, you can basically take trades as price pushes up right here. I know there's no specific strategy for this, but this is one way that a lot of people trade as well. So whenever price reaches a pivot and rejects off it, people will typically enter that for a quick profit, right? 100 pips. And this is what you see someone like Kevin do a lot. The thing with Kevin, though, is that he's trading a personal account, so he doesn't use a stop loss, which I don't recommend you guys do. He does it because he's confident about the moves that he's taking. So like this is one way of doing it. You see price come up, rejects off the pivot, quick 100 pips, and you're out. It does it again right here off the next candle, quick 100 pips, you're out. It does it again right here on the next candle, quick 100 pips, you're out, right? And this is a more advanced way of trading. So I don't teach this to you guys because this is something that you can make a lot of money doing it, but you can lose a lot of money. So like if I was to teach this, it would have to be for an advanced class. Like Kevin's been asking me to do like an advanced training for people who are like really good at this stuff or that can identify it. Because I can do it too, but it's very risky. I can't teach this to beginners, or I can't teach this to people who just aren't in that level. Because you're gonna get greedy. Like you're not gonna know when to stop, right? So like if I was taking something like this, typically me, Sisuk, and like a couple other people that trade like this, we'll take like maybe 2 or 3 entries. So 2 or 3 rejections, quick profit, and then we're done. Wait for the next one, right? Because you can see how far it's overextended. At this point, I'm not messing with it anymore. Again, we see price start to shift this way, or you can see how it retraces up right here. And then it consolidates a bit. When it starts to come back down, you can see that you can do it again right here. Right, price comes over here, rejects off that, 1 entry. Same with this one right here. Rejects off the pivot, 2nd entry. Another one right there, or not yet. Right there, rejects off another entry. And that's 3 entries again right there. So that's why sometimes you'll see people who will stack up like every so often they'll have like 3 wins back to back, right, on the same period. So they're doing this. They're just taking 2 or 3 trades. They're done. Wait for it to set up again. Take another 2 or 3 trades, and it just repeats. It's like over and over again. So you wait for it again, and then you just do it again. Like for example, right here, price goes back into consolidation, and then they just do the same thing over and over again. Right there, another rejection. There's 1 entry. Another one right, or not that one. Another one right there, 2nd entry. and then another one right there. And they're just taking rejections off these pivots. So let's see, follow-up question from HP. HP is asking, if you take a B strategy and it hits and retraces, can you take it again? So that's up to your preference, right? I don't recommend that because that's just being greedy, but a lot of people do that. So I personally wouldn't if it already hits. If it comes back and retraces before it hits, then yeah. Like for example, today, if you guys remember the entry for the breakout today, right? So if we go back to the breakout from this morning, show you, there was a lot of times you could re-enter that trade. I didn't do it because, you know, I don't want to instill bad habits within you guys. Like there's a lot of like little tricks that I do personally and that a lot of other people do in the group, but I don't want to instill like bad habits in you guys. That's why I don't teach you guys how to do stuff like this. Not yet. You know, once you get good enough and you're comfortable with your trading, then, you know, we can probably have a session. That's why like people still have one-on-one sessions with me, but they pay to go over like these more advanced concepts, right? Because they want to go over the stuff that's like really, really advanced compared to the stuff that we're typically going through in the basics over here. Like with this session is mostly like basic stuff. But okay, so I forgot where the entry was for this breakout. Let me check real quick. Oops, that was on an entry. So there's the breakout. Yeah, the breakout was was that big candle. So I guess this was kind of an iffy entry. I think we just entered it because it was it closed like super late. Like for example, this bottom wick right here, it closed kind of late. So like when we were looking to enter it, the body was actually like down here. So this might have been too early of an entry. I think the actual entry probably should have been right here. I mean, but it's all good. It's still hit, but it looks like the entry probably should have been right here. You know, I probably jumped the gun a little too early right there for that earlier entry, but we knew today was going to be a tricky day. Either way, if you took this entry here, you still would have hit your full TP. But we did take the entry right over here. And that's the one that I have drawn up over here, right? So this is what we took this morning on the live. And I'll show you like other areas where you can re-enter. So like, for example, right here, HP, like say you're entering this trade right there and price drops, right? Say you, for example, you're already in the trade and you hit your TP. When I took the trade here, I entered later, I actually entered on the retracement. So like, if you wanted to take this for multiple trades instead of just one trade, you could have taken one quick scalp right here, full TP. As price pushed up right here, you could have entered another trade. So like you would have just hit it, you would have entered as soon as it pushed back up. That's what I see a lot of people do, right? You'll have like basically 3 trades running at, or 2 trades right now. And then the third trade that you could have entered is when it comes back down. This is where I actually entered. I entered when price came back down right here. I entered my sell. And I caught my TP right there. It happened like within a few seconds. So it hit my entry, dropped down. I only went for 100 pips. And it hit my TP. So as you can see right here, there's 3 different entries. If you entered immediately on open, you would have made 100 pips there. You would have taken another entry right here as price came back down. That would have hit your TP. And then for the third entry over here, like this one right here, you would have had another TP right there. So that's 3 back-to-back wins. And I'm sure if you look at the profits from today, you can see a couple people who did it. Like CC right here, right? He double dipped into it. You can see his entry came up at like 631 and then 632. He did basically what I just said right there for the breakout. Mauricio over here as well. Let's see. Can't see it on that one. Let's go over here real quick. Yeah, Mauricio's earlier profits. It's kind of far down. His trades would have been up here on like 630. You can't see it on there specifically. Same with Charles over here. or not that one actually. Let's see. I'm just looking for people who did what I just kind of referred to. Like Ross over here. Ross kind of did it, right? He entered at 631, 632. He basically quadruple dipped into the trade. He did kind of what I just mentioned. The first entry was right there. He made 692. Second entry was right there. As it pulled back, you could have made a third entry right there. And then again right here at 636. So he made all these trades within 6 minutes. So he entered his TP, entered his TP, entered his TP. And a lot of people do it. It's not, I mean, I wouldn't recommend doing it if you're not comfortable with it, but if you are, then perfectly fine. Same with Joshua here too, right? Joshua at 632, that was the initial entry for the breakout. He pulled out a little early, made some profit. His second trade over here, 633, a minute later, made more profit. And then again, right there, same exact, like literally when it retraced up, he entered it again. And then for this one, he actually let it hit TP. He locked in a total profit of 445. But yeah, I mean, this is all going to come with practice. Like I would recommend just practicing with it, HP, until you like build your trade psychology. Because realistically, a lot of this stuff is luck, right? As much as I hate to say it, a lot of this stuff when you double dip into trade is luck. There isn't really much of a strategy that I can teach you that will help you understand it. But it's all about like your intuition. Like once you have your trade psychology down, you can kind of see where price is going. You can double dip into these moves. HB said, is it the time on the trade when you buy or sell? It's when you buy, I believe. Yeah. It's when you buy, because you can see when the entry happened right here. So you can see all of these entries came in around the same time. First entry was at 632. The entry for the daily was, or the breakout was right there at the same time. 632, yeah. So the entry happened here at 632. That's where Joshua took his first trade. Second trade about a minute later. So he did exactly what I just referred to right here. So the first entry right here, he took it on the actual open of the candle. The second entry here happened at 633. So he took that second trade right there when it pulled back up. And then the last one he took over here at 633 towards the end of the minute, he took it as it came back down. So he actually did exactly what I just mentioned. There was one entry on the open of the candle, one entry on the retracement, and then one entry on the continuation back down. So it's actually a good example. I'm glad that people actually took that because it lined up with my analysis, what I just mentioned. And you can kind of see right here with Joshua's trades too, he wasn't that confident about it initially. So that's why he was kind of just like double dipping into it. And then when he saw it come down that other time, this is when I was telling you guys, okay, I'm going to take this trade if it comes back down. That's where he was confident. He took a full lot size on this one. So you guys can do that as well. If you want to double dip, take the smaller lot size, and then when you're like super confident, take the actual lot size. So yeah, HP, if there's anything else you want me to cover regarding that, let me know. But as I mentioned, this stuff is a skill that you build over time. It's not something that you could really like see examples and learn it. You kind of have to just have a feel for it, especially when you're trading under very fast conditions. Like in the morning, you don't have time to think. You're just like entering if you feel like it's going to go down or not. Yeah, no problem, HP. Glad I can help you with that. See if there's anything else here. Yeah, definitely, no problem, Lonnie. I know a lot of you guys want to do that. Like it looks easy when you guys see it on the screen, but when you're doing it real time, it's really stressful. That's why I don't even do it myself anymore. I used to trade like that all the time, and I make a lot of profit. You guys remember like the days where I'd make, big profits every day, but that would stress me out. Like the whole morning, I'd be so stressed out, and then if I lost a trade, I'd be so pissed off after. So now I personally just like taking like one or two trades with multiple accounts, and then they just add up to the same amount anyways. So it's just up to your preference, right? For me, I don't like being stressed out. I like having, I wouldn't say relaxing trading, but trading where I'm not like freaking out or worried that it's going to hit my stop loss. So other than that, guys, I think that's it for these right here. If you guys have any other questions, feel free to put them in the chat. I'll go over some examples of the 15-minute right now that I was just discussing earlier. But if there's anything that you guys want help with, just feel free to put your questions in the in the chat. Otherwise, I'll go over that 15-minute strategy. I think it's a really good strategy, and I think you guys will like it. It's basically the same high-low scalp strategy. It's just on the 15-minute, and I tweak the requirements a bit. So let's go to this 15-minute chart. I'm going to put the requirements up here. Not this one. All right, the K2 15-minute high-low strategy. So for this strategy, you're going to need the momentum indicator, the high-low indicator, the trend meter, and I think that's about it. It's a very simple strategy. You don't have to confirm the overall bias on this. Well, at this moment, not yet. I'm still testing this, but if we need it, then maybe I'll add it later. But I think at the moment, it's not really required. So let's start off with the first example over here. So I'll just go back and I'll show you the entries that happened today. So I've been testing it like all sessions. I haven't really put any bias on anything. I kind of wanted to look for losses purposely to see if I could find any here. I know there's a loss right here, but so there's going to be dead periods where I wouldn't trade. And those are the main times where I wouldn't take a trade. But, and I can probably just put it here. Say avoid dead periods. And it's going to be 2 hours prior to next session. Right, because you start to get like weird movements around that period. I'm gonna just update this right here. Okay, to 15-minute. A lot of this stuff I don't really feel like I don't remember to remind you guys because I'm so used to like knowing when not to trade. Like typically you don't want to trade 2 hours before New York session closes because the market goes all crazy. Same with and I was using this as an example because London opened right here at midnight, and that would be considered a dead period. Typically, if I'm trading Asia session, I stop trading around 10 o'clock because that's when the market starts to move funky. That's 2 hours before London. So we'll go over this example later, but just let me show you an example of how the actual strategy would have worked here. So for the first requirement, you want to confirm the trend using the K2 trend meter. You have your settings set to chart. So if you guys are not familiar with the trend meter, if the trend meter is green, that's indicating a bullish trend. Trend meter is red, that indicates a bearish trend. If it's blue, that means it's indecisive, it's going sideways. So for the first requirement here, you want to confirm the trend. The trend here is bearish. So that's gonna be requirement number 1. Requirement number 2, you want to confirm the previous high-low using the K2 high-low indicator. So we have a K2 high-low indicator right here. Prior to this candle, this is going to be the most recent low. And in order for it to be unbroken, that just needs to mean that, let's just go back over here real quick. Okay, so this is before that entry, right? We confirm the trend is bearish. For the second confirmation, you want to confirm the previous unbroken high-low, which is going to be right here. This is the low. You can't count this candle yet because it hasn't been established. In order for it to be established, you just need it to be on the chart. And when the candle passes it, you can't disappear. It has to stay there. That's how you know that it's established. So requirement number 2, confirm the previous high-low. There's one right there. There's a high right here. We don't care about the high because we're looking for a sell. We already confirmed the trend that it's bearish. We're not looking for any buys here. So we're only looking for the previous lows. And if you want to go back and mark up like pretty much all of the lows, you can do that as well. Like if you already know you're looking for a sell, you just go back and mark up all the lows right here, right? It's not too difficult, and it's going to give you a better picture as to like where price is likely to go. So with that said, we have requirements 1 and 2 met. For the third requirement, you want to confirm price break and close past the previous unbroken K2 high-low. So this candle right here is not going to be the entry. This right here is going to be the entry. You can see that this candle right here, it broke 2 lows. It broke this low right here and it broke this low right here, right? So we confirm the trend, it's bearish. We confirm the previous unbroken high-low, this one and this one right here. We confirm price break and close past it, which would be this candle right here. You want to confirm you're trading in the direction of momentum using the K2 momentum indicator. Right here, we have a sell momentum. And that's about it. Once you have that all set up, you enter this for a short position. It's a fixed TP stop loss, 500 pips. It's pretty much a set and forget strategy. You just take it, you let it run, and then just let it either hit TP or stop loss. Straight to TP right there. So there's the example of the 15-minute high-low strategy. Let's see if I can find another one here. So this one over here, the other example that lost, that would be considered the dead period. So right here, there would be technically an entry right there. All of the requirements are, I mean, for the most part, met. The only thing here is the whole dead period thing that I just mentioned, right? So it's at 23:30. It's 30 minutes from London Open. London Opens right here. So I would have skipped this trade. This trade would have lost if you'd taken it. So let's avoid the dead periods. Let me see if I can find another example here. There's like a gap in price right here. This is because market closed for a bit, but you know, just using this as well, we won't even use this as an example because it's not a good example, but just showing you the high right there. We have the high, we have price breaking close past it. Trend meter is green, you're looking for a buy. If you took that right there for a buy, which I wouldn't, but I'm showing you the example here. This would have also hit profit target right there. So let me just keep moving down. All right, trend meter is still green over here. None of these. Okay, here's another example. Actually, trend meter is not green right there, so no. No entry there. All right, here's another one right here. All right, so again, same situation. Confirm the trend meter, it's green down there, so you're looking for a buy. Confirm an unbroken high-low. This right here was broken on this candle, but this would be the entry candle, so this doesn't matter. But before that, no, it hasn't been broken, right? It's okay if it's tested, but it just can't be broken. Like it can't be wicked off or anything like that. So first requirement met, second requirement met, third requirement, confirm break and close past the unbroken high. So right there, we have it break and close above it. You take that for a long position. Confirm the direction momentum. We have a buy signal right here. Fixed TP stop loss, 500 pips. Let that run, full TP. Other than that, let me see. I'll pull up like a random day. So let's do this. Let's just go to random day and I'll show you guys how it works even like on a random day. Like this is something that I can't plan out, right? Because I just go to random day. So let's go to like, I don't know, May 24th, whatever this date was. Right, so May 24th, another example right here. Let's go back to this candle. Let me put the requirements up here again for the high-low. Right there. Trend meter down here is green, right? So what are we looking for? We're looking for buys. So what I'm going to do here is I'm going to mark up the high right there. And what I'm looking for is I'm just basically looking for a candle to break and close past, you know, either of these lines right here. So we have the trend meters green. We're looking for a buy. We confirm the unbroken highs right here. Want to confirm price breaking close past it. This candle right here breaks and closes past it. You confirm you're trading the direction momentum, bullish signal right there. You take a long position right here. Same thing, 500 pips. And there you go, full TP again right there. So it's super simple. I mean, it's a really easy strategy to apply. It's like a set and forget. I know there's red flags here, but for this strategy specifically, since I'm still testing it, I'm going to disregard the red flags. Also because it's on a higher time frame. In the future, I'll have to like incorporate that. If it doesn't seem necessary, then I'm just going to ignore it, right? 'Cause it's not, I'd rather take If it still hits, like even with the red flags, then you might as well just take a trade. It's a one-on-one risk to reward. So if you're winning, two, you're losing one, you're still in profit. So here's one more example right here. And if there's any questions regarding this, just let me know and I can cover it. But I just want to show you guys like basically raw examples here where I haven't really gone and like I can't just point out like, oh, like any entry here because or any specific entry that I know is going to win because I just pulled up a random date. Like I do go back and test May 25th, like by random and have it work, right? So right here, same situation, high, candle breaking, close above it, green momentum, trend meter is green. Same thing again right there, 500 pips. But let it run, full TP. So it's basically a set and forget. You just take a trade, set it, forget it. Maybe I'll call, maybe like when I see these entries, I'll call them as signals or I'll give you guys, a heads up and you guys can take them as signals, I guess. I don't really like doing signals, but if it's something that you guys like or want me to do, then maybe it's something I can incorporate. I just don't like doing signals because I feel like signals bring along a scammy connotation, right? Like whenever you guys see someone doing signals, you think they're a scammer automatically. So I don't like doing signals, even though like when I did do signals, like the trades would always hit. I just don't want to have that reputation with K2. I'd rather teach you guys how to trade rather than just give you guys signals and obviously the trades are going to hit. But I'd rather have you guys actually know what you're doing rather than just copying signals. Because these are, I can call these as signals and they're super simple. Like I could pull up another random day here. Where's let's see, April 7th. I don't know what's going on these days, but another random day here, obviously. Let's see if we could find something here. All right, so again, right here, trend is bullish. See the trend meter is green. Mark up the highs right here. High, high, high. Another high right there. All right, so this one right here broke that high, obviously. Again, we have a high here, it's unbroken. This candle broke it. Momentum is green, trend meter is green. You take this for a buy right here. You go for 500 pips, let it run, full TP. So, I mean, I could pull up any date you guys want. If you guys want to see an example, this is how good the strategy is. Yeah, I can literally pull up any date that you want me to. I don't know, we'll go back to March over here. So here we are back in March, random day in March 17th. Trend meter is green. I mean, there's another example right here. March 15th, trend meter is green. So you're just going to mark up all of the highs here. Same thing, you're looking for price break and close above the unbroken highs. So like right there, this candle breaks above it, momentum is green. So we're looking for a buy, trend meter is green, looking for a buy into this for a long position right there. Fixed TP stop loss, 500 pips. I mean, if you guys think about it, this is like full TP again right there on a random day. If you can do 500 pips, so let's say the strategy is 80%. I think the strategy has a higher than 80% win rate. Say, for example, you're winning 8 out of 10 times, right? So 8 out of 10 times 500 pips, that's 4,000 pips profit out of 8 trades. You have 2 losses. It's 1,000 right there. So 4,000 minus 1,000, you're still at 3,000 pips. You're taking this with a 10 lot like I'm doing, $10. It's 30K right there. That's 30,000. That's a lot of money to make off just one strategy, right? And this is like a very, very simple strategy. It's really hard to mess this up, but I'm pretty sure people are still going to mess it up. So don't quote me on that. I mean, yeah, if you guys want to play around with it, feel free. Otherwise, I'm still going to be testing it for a while. I just got to figure out what needs to be changed. There's always going to be tweaking to be done. Maybe we'll create some other red flags for this specific strategy, but for the most part, I think overall, if you're doing this for a 1-to-1 using proper risk, like 1%, you should be perfectly fine because you'll be winning more than you're losing. And it'll balance out. Sorry, Casey, I literally just saw your message. You said, can you, you have a punch list of the red flags, tradings, or zones I can note? Um, yeah, so these are the red flags right here. Uh, oh, sorry. You're just talking about times. Yeah, sure. So, dead zone trading times. So the first one is going to be uh, New York close. So you typically don't want to trade around like 11. We'll just say like 12, or we'll say like 11:30. Or we'll do, yeah, 11:30 a.m. Pacific to New York session close. So basically, like by 11, you should be done trading. Um, and then again for here, this is going to be 10 p.m. Pacific to Asia close. That's pretty much it. I mean, there's just two time periods where you could avoid it. The thing with London is that it crosses over with New York, so it doesn't really matter. The volatility is still there. Um, or I mean, I guess you can also, because this is when we get off the live, you'll see the reversals happen around 8 o'clock. So like 8 a.m. Till I guess like 10 a.m. New York session. Be careful. It's like probably the main time to look out for. Let me go over here. I could probably show you guys, how things kind of move funky. So let me just take everything off the chart. So like basically market opens here at 6:30. We get off the live around 8. You'll see the reversal and basically consolidation happen because this is when people go to lunch, right? So like around 8 o'clock, we get off the live from 8 until 10. Or you can basically, it's easier to just cut this up in hours. So like from 8 till like 9, you have like a dead period where price kind of just flattens out and it doesn't move. And you get a small push and then it just continues into a bigger range where market moves kind of weird. So like basically from like 8 to 10, this is why I stopped trading at 8. Like people always wonder why don't I just keep going? This is usually where people start to lose money. They'll be good like during the live and then hits 8 o'clock and they start to mess up because price starts to go sideways or it just goes into a really big range. So for the most part, that's basically what I would consider dead. And let's put this, I'll save it as well. Dead zone trading times. Question from Casey. Casey said, you see the 15-minute strategy being affected by these session high lows? From my testing, I haven't really looked at it, Casey. So like if I ever run into a loss, I'll probably turn on the sessions to see if it actually was there. But since the spread since our range is like so wide, it's not like 100 pips, right? We're not going for like a quick push. Typically, it's enough. It's like well enough for it to not get caught within that I guess that little period. Let me see if I can find anything here. Maybe you're right. Maybe that's something that we should be taking into consideration, but I just haven't really looked at it. Let's see. There was that one loss that happened right here. Okay, yeah. So right here, the same trade that we were looking at that was a loss, it was actually right at the session. So maybe that is something that we should take into consideration. Yeah, no, you're right. So this right here, this is the one that I showed you where I considered it. Actually, there was no session there at that time. So it didn't come up until after. This is why I don't like trading around like the dead periods because there's no session right there. But when the session closes, so you can see right here where the session starts to change, there's actually a session right there. The problem with the K2 high-low sessions is that it gives you the session from the previous day. So until this market closes, it's not going to update the new session. So there was a session there, it just wasn't updated yet because it had the previous day's session. So like, there's nothing there because the old session was down here. As soon as New York Asia session closed, because Asia session closes on this next candle, then it updates and you're like, okay, now there's a session above there, right? And you don't even see the London session here because we're in the middle of London session. So you'll see a little later, a red line will come up right here, right? So yeah, the session would come in handy. It's just the problem with these higher time frames is that we're trading like the days haven't finished yet by the time we get to that entry. So I would probably test it without a Casey, and then if you need it later, or I would just look at it. So I would use it as a red flag confirmation or something like that to maybe avoid a certain trade. But for the most part, I think it looks pretty solid. Yeah, other than that, let's see. Milzon said, oh yeah, and you're right too. So Milzon also mentioned that the 15-minute loss was yesterday during a holiday. So yeah, yesterday was a holiday as well. So maybe that's another thing to avoid trading on holidays. In general, we don't trade on holidays anyway, so we would have, we wouldn't have taken the trade there. But I mean, other than that, everything is pretty smooth. Like if you take this one right here. But yeah, thanks, Melzon. You're right. There's a lot of factors that affect the market, right? There can be news, there can be sessions, there can be a holiday, there can be a lot of things happening in the market that could have affected this right here. Like things that are out of our control. But I like to start on strategies with a baseline, and then as things need to be added, then I'll add stuff. Like if I need to add an overall bias, then yeah, great, I'll add an overall bias. If not, then I can just stick with what we have. Because you don't want to constrict yourself too early on. Like you want to actually test out the strategy, see how good it works, and then if you need to make changes, obviously you can make changes, but you're just building foundation from there for that strategy. So let's see, other than that. Yeah, and I agree with John as well. John said trading on low volume days are erratic. Yeah, same here. And that's typically where you won't see any entries like that. Like today, we had a high volume today during pre-market and open. So like this right here would have been perfectly fine. But yeah, this example right here was a low volume day because of the holiday. So that's why it's kind of unusual how price moved from that point. So yeah, John's 100% right. I would definitely avoid it if it's a holiday or a dead time, I guess, in the market. Question from Frazier. Frazier said, I have a quick question about the high low. On the V3 requirement, it says confirm high low. Does this mean no? So no need for it to be a higher high or a lower low. It can be any high low. So it can be a lower high, higher high, lower low, higher low. It doesn't really matter. When you're confirming these high lows, you're just looking for high lows that have not been broken yet. So for example, if you're applying the V1 or the V3, like you mentioned, so let me see if I can find one here. So there's one right here. Oh no, actually it's not. Actually, it was one right here. Okay, so it was like literally right next to it. So looking at this right here, it's probably not going to be entry because the sessions is right there, but just using this as an example, Frazier, if you're looking for a V3, it doesn't matter if it's a higher high, a lower low, higher low, lower high, whatever. You're asking about this requirement right here, confirming the high low. You're just marking up basically the high lows that have not been, I guess, tested or broken yet. So like you're looking for a V3 here, you're looking for the most recent high low, which should be this one. And it doesn't matter if it's a higher high or a lower low. So confirming the most recent high low, it would be this one and this one right here. So if we were to take the trade here for a V3, I don't think this is a V3, but just using it as an example. Yeah, there's no V3 because the stop loss is too wide. It needs to be tighter. No, this would still technically be an example for you. So no need for the higher high or lower low. It just needs to be any high or any low, just the most recent one, because that's what you'll be applying for these V3s here. All right, guys, I think that's it for the questions. If you guys have any other questions, feel free to put them in the chat. Otherwise, we've been on the session for over an hour, so I think it's time for us to maybe wrap this up. But if you guys have any other questions, feel free to email me or message me on Telegram. Just a reminder, we have these sessions every week. So if your question didn't get answered today, or if you can't think of the question that's on top of your mind right now, we'll be back here tomorrow, next Monday. So it's typically on Monday. We had a holiday yesterday, so we didn't have the session, but typically every Monday around 2 p.m. we have this session, unless you guys request to have it at a different time, which, I try to make it as accessible to everybody here. So if you guys need it at a different time, just let me know. Otherwise, I think that's about it. All right, guys, have a great rest of your day, and I'll see you guys back here tomorrow morning for the next live session.